Hello, I'm David Chow from the Finance News Network. Joining me today is Dr. Harley Dale, the Chief Economist from the Housing Industry Association, and he's going to talk to us about the Australian economy and the latest issues in the Australian property market. Harley, thanks for joining us.
Thank you.
Firstly, Harley, how's the Australian property market been performing this year? Which states were the best performers and which states performed the weakest?
Well, in an aggregate sense, the property market's been performing very well, but that masks the fact that there are huge geographical differences around the country. The star markets, if you like, have been Sydney and Melbourne, both in terms of residential property price growth and also in terms of new home construction activity. The southeast corner of Queensland in patches is showing a little bit of promise as well, so you kind of have an eastern seaboard story there, if you like. But once you move away from that part of the country, then you're seeing price declines, for example, in areas like Perth and Darwin. You're seeing weak construction as well as price markets in places like Adelaide and South Australia more broadly. So it really is a very mixed bag.
Thanks, Harley. As you know, the Reserve Bank in August cut interest rates to a record low of 1.5%. And the Reserve Bank said that property prices only rose moderately this year, and it's unlikely that lower interest rates would exacerbate risks in the housing market. But won't lower interest rates make it easier for people to obtain loans and potentially drive up property prices?
Look, I think it's fair to say that the Reserve Bank has taken a calculated risk here in lowering interest rates to a fresh record low of 1.5%. I think they were probably aware of the fact that the major financial institutions that of course hold the lion's share of mortgage business in Australia were not going to pass on the rate cut in full. I think they're also cognizant that we've had a very long residential property price cycle in Sydney and Melbourne. Affordability really has got considerably stretched in those markets, particularly in Sydney. And the gap between earnings growth on the one hand and median home prices on the other, in an established property sense, is starting to get a little bit too wide. They're probably also aware that, of course, APRA, the prudential regulator, has clamped down on the investor side of the property market. I think it's clamped down too hard in the sense that the brush it's used has had too much of a broad sweep, but there's a constraint, if you like, there on what investors can do in a lower interest rate environment. And put that all together, and they obviously thought that other factors within the economic environment were more important. But they probably also are aware that a further lowering of interest rates may indeed extend the new home building cycle in both New South Wales and Victoria, which is good for those economies. It's good for employment, and those economies are obviously the two fastest growing population parts of Australia. They're the two biggest populated areas of Australia. So there's an activity boost, I guess, on the one hand from lower interest rates that offsets the risk of perhaps reigniting some real fervour in residential property markets in Sydney and Melbourne.
So Harley, let's talk about housing affordability now. As you know, it's a major issue in Australia these days. Do you think the Australian government is doing enough to address this?
I think the unequivocal answer to that question is no, because we have very little federal government input into the challenge that is housing affordability in this country, particularly for younger generations. I think without a firm federal commitment from the federal government, where there is a housing minister in cabinet sitting next to what is already a health minister and an education minister and a minister for infrastructure, without that guidance, if you like, and policy direction from a federal level, I don't really think we're going to address the issue of housing affordability, even though I recognise many of the levers that you need to pull to try and address the issue come from a state government level rather than a federal government level.
Last question, Harley. What's your outlook for the property market over the next 12 months?
Well, I think that really depends on where you are. It's such a diverse market here in Australia, but the two best performing markets have obviously been Sydney and Melbourne, growing very, very strongly in terms of median residential property prices. That growth will continue, but at a slower rate, I think, than what we've seen over the last few years. Markets like regional New South Wales have some opportunity, I think, for further momentum and growth. going forward, particularly over the next probably 12-18 months. But outside the two key markets, you don't have a situation where there's a fast rate of population growth occurring. You don't have a situation where labour markets are looking especially strong. Government budgets are quite constrained in terms of their ability to help kickstart economic growth. And that kind of overall environment, even allowing for the fact that interest rates are once again lower than they were, I suspect we'll see modest growth in residential property prices, but I'd be surprised if we saw fast growth in any of those markets.
Well, Dr. Harley Dale, thank you very much for joining us and sharing with us your property market insights.
Thank you very much, my pleasure.